For many of us, car, vehicle, household insurance costs us quite a penny. And in this episode of the Wealth Nation podcast, I'm giving you 5 ways in which you can lower your vehicle insurance.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
This is Yolanda, and thank you for joining me in another edition of the Wealth Nation podcast. Now, I am a financial advisor, I'm a wealth coach, and it is my goal on this podcast and any other social media platform that we engage on. I want to give you tips and strategies that you can use to manage your money well and build generational wealth. If you're new here, please subscribe to this podcast on whichever platform that you're listening on. Also, link up with us on our various social media platforms. We're on YouTube, LinkedIn, Twitter, Facebook, also TikTok. So say hello. Let me know what you think about the podcast. Leave us a review on any of our social media channels and say hello. If there's anything that you would want me to cover on this channel, let me know. I'll do my best to give you the best information. And in this episode, we're going to be telling you how you can lower those insurance premiums. The Wealth Nation podcast is sponsored by Financial Success Summit 2021. Now, this is a conference that I am putting together. I am getting the top folks in their industry, from property to Bitcoin to formal investments, banking, short-term insurance, budgeting, all of the tools, all of the tips, all of the tricks, all of the strategies that you need to break free financially. I'm getting all these folks together in one virtual room that's happening on the 17th and 18th of April 2021. So if you want to get tickets to this event, go to the website. It's www.financialsuccesssummit.net and buy those tickets. Tickets are selling for just 99 Rand. And if you use this coupon code for a limited time, you can get early bird tickets. So go and shop for tickets. You're going to get a 60% discount and pay just 40 Rand for 2 days of power-packed financial advice. Use coupon code early bird at checkout. This offer expires on the 31st of January 2021. So we're talking car insurance today and how can we lower our premiums? Well, the first thing that we got to do is, firstly, we got to shop around. Now, I do this at least once a year, and my goal is to knock off at least $2,000 a year from my annual budget. All right, so you got to compare your premiums regularly. You got to review whatever your policy is, and this is for long-term and short-term insurance as well. That's when you know whether you're getting value, because if you have a car already, one, that car is getting older, the mileage is racking up, the value is dropping. So you got to review your policy, make sure your cover amounts are appropriate for the year that you're in. And I know a lot of folks go for years and years and years without reviewing their policies. They just accept the increases, but you know what? It doesn't make sense. If the car is older, the value is dropping, your driving experience is increasing, your premiums should also decrease. And fight for those premiums. It's so competitive in the insurance market in South Africa. You got to call people up and get the quotes. Now, I know it can be a pain because it can take some time, but for at least 2,000 Rand a year, I'm willing to put in that time. And the rates vary. They really do vary from insurer, and you gotta call around. Now, if you want to get a quote from a bunch of different insurance companies, please go to my website. It's www.financiallyfabulousfemales.com/car quote. And I'm going to get folks to call you. So it's going to be even more convenient to you. I'm going to get some of the top insurers in the country to give you a call, to give you the best quote possible for your vehicle. So go to that website again. The link is www.financiallyfabulousfemales.com/car quote. And I'm going to get somebody to give you a call to give you the best deal possible. So ask around. Even if you are with your current insurer, give them a call. Don't readily accept all of the various increases that happens. All right. And also, I see a lot of providers are giving you these cashbacks. However nice that may be considerate to know that sometimes those cashbacks are added onto your premium. So you might think you're paying a little more, at least you're getting something back. Remember, even if you're getting something back in 3, 4, 5 years' time, factor in inflation in those amounts you're getting. And sometimes when you sit down with a pencil and a paper and do those kind of calculations, you realize you're not getting much back at all. You'd rather just shop around and get the biggest discount that you can possibly get at this time. Because remember, if you can save 2,000 Rand a year and take that 2,000 Rand and put it into your retirement annuity, you're going to get a rebate from the South African government. I know sometimes, we talk about things on the show in isolation and we think about things in isolation. But when we step back and look at everything holistically, if we look at our finances holistically, we can see the bigger picture. So whatever we can save, we can put it into our retirement annuities and get rebates back. And for me, that's a great thing. We can even put it in our tax-free investments, get double-digit growth from offshore funds, and don't pay any tax on the profits. So look carefully at those cashbacks. It might not be adding value to you. If you need help, go to my website, fill it in the contact form, and we can talk about it. I can show you how to do these calculations to see how everything fits in. All right, it's nice to have, yes, we have life cover, we have disability cover, we've got house cover, car cover, bond cover, every kind of cover available, but we don't really see how it fits into our entire life plan. So we got to be thinking on the next level. We've been doing the show for quite a while now. Various platforms that we've put different types of education material. So now is the time for all of that to start clicking. All of that needs to come together so we can start improving our financial lives.
Raising financially savvy children involves teaching them a variety of skills, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, it prepares them for real-world finances. Financial literacy is a vital skill, and it is never too early to teach your kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now purchase the Financial Literacy for Kids workbook, which is aimed at primary school kids. It's now available at www.financiallyfabulousfemales.com. This workbook provides you with 12 lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge. Shop now at www.financiallyfabulousfemales.com.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
And remember that sometimes cheaper might not always mean good. All right. So when we are thinking about replacing cover, make sure that you're getting like for like cover and you're getting the same kind of benefits and it's comprehensive benefits. You're not losing anything when you do replace your cover. All right. So the second thing that you got to consider doing is bundling your insurance or sticking with one insurance company. And, a company like Discovery does this very well, where they want you to consolidate the cover, all of them, all of which they want you to be with them, of course. And they're giving you greater discounts for actually bringing more business to them. So consider that instead of having stuff spread around different touch points, you can stick with one insurer and get a value-added service by keeping, especially your short-term, if you can keep things together, your vehicle insurance, your house insurance, your home contents insurance, keep it together to make it easier. You might get a discount. But like I said, always shop around. There's so much of value happening out there. The next thing that you can consider is to increase your access. Now, by choosing a higher access, you can significantly lower your insurance premiums costs. Of course, you got to make sure that you have enough money set aside in order to pay the higher access in event that you do claim. So it's a bit of a seesaw here. That's the way the access you choose affects the premium you pay. The higher the access, the lower the premium. But remember that you need to be able to pay that access amount at the time of claim. So if you do have a lump sum ready, you have a sizable emergency fund ready, you have this option where you can really save by taking a higher access and paying lower premiums. And again, you got to sit down and work it out. All right, you got to bring out the pen, you got to bring out the paper, and you got to sit and do some calculations, because if you have the savings ready in your account, why are you paying those higher premiums? You are able to afford the higher insurance access in event of claim. So you got to weigh your options here and see which option suits your needs, a higher access or a higher premium. The next thing you have to consider is that the car you drive also affects the premiums that you pay. Now, we always read in the newspaper the top 5 high-risk vehicles in South Africa. Now, obviously, high-risk vehicles have a higher risk for theft, for hijacking. So obviously, you're going to pay that higher premium. I know I have friends and family that have cars that are newer than mine, that cost a fraction of the cost of mine. And I'm not driving no fancy car. My car is like 6 years old, but my car is paid off. So that's one of the nice things that where I get to play with the insurance and I get to negotiate. But because once your car is paid off, you don't have to have insurance anymore. Whereas once the car is financed, you have to have insurance. It's part of the bank loan agreement that you have with the bank. All right, so I have friends and family with really expensive cars, high-risk cars, paying almost 30, 40, some cases 50% of your car premium in addition to half that price going towards vehicle insurance. And that is crazy. So when picking a car, look out. I know maybe it's cheaper. The price is cheaper. It's a good runner in terms of fuel efficiency. But look out for the insurance premiums before you actually go and buy the car. Do some research. And don't just buy on price. A lot of times folks are buying anything and everything on price, but you got to see the value that you get back as well. You want something that's safety rated. It's light on fuel. It suits your budget, your lifestyle, your status. Because those German cars, that's what it's all about, right? It's about the status. So look at a car before you buy it. Call around, call a couple of insurance companies and just, give them some model and mileage details and see what prices that you get. Is it something that you can afford? And lastly, the one thing that you can do to reduce your insurance premiums is to stay off the road a lot longer, especially now during Corona. Life has changed a lot. Many folks are working at home and you can see it. If you're out on the road, you can see traffic is a lot less. You're not in that traffic as much as we were like maybe just over a year ago. Traffic was hectic around this time of year. Schools were back and things were crazy. It's not like that anymore. A lot more folks are staying at home. And although, schools will open soon, if your kids are schooling in your area, you're most likely going to be running around in your area. You're not going to do the longer commute to work anymore. And if you're somebody who's in that position, you got to call and renegotiate with your insurance provider and show them. Pull out your tracker records and show them, you know what? I'm not traveling like before. I'm not doing those daily commutes. Remember, it's high risk to sit in traffic, in peak traffic in the morning and the evening. Your risk is greater. Insurance companies are coming to the party. They're renegotiating with people for their insurance premiums because behavior has changed and prices needs to come down. So call and negotiate. And it doesn't help and it doesn't hurt to get a third or fourth referral that you can take to your current insurer. And that's something I can provide you with. So go and check out our website. It's www.financiallyfabulousfemales.com/car quote. And I'm going to get some of the top insurers in the country to reach out and give you a quote that could even be better than what you have right now. It's a very tough game, short-term insurance, and it's very, very competitive. Don't settle for anything less than you deserve. So fight for every rand. You work hard for those rands. You got to fight for every single rand. Now, every year, the Umbud, the short-term Umbud, and remember when we say short-term, we're referring to things like vehicle insurance, household insurance, building structural insurance, contents insurance, that kind of thing. So I'm sitting with the 1999 report right now because the 2020 report is not out yet. We should be getting it in a couple of months' time. But from the report that I see, now if you're a Wealth Insider, if you go into the members area in the short-term section, you're going to find this report there as well. And you can download that report and have a look at it. And you'll see the things that stand out for me are these companies here. One, ABSA. They form a high part of the complaints that are received by the short-term Umbud. That's almost 6.5% for 2009. Another company that stands out for me is Guardrisk and Hollard. Guardrisk is at 5.8%, and Hollard is 5.3%. And I know you're thinking Yolanda is only 5%, but if you see the other companies and their level of complaints that go to the Umbud, it's like a 0.05, 0.06. Discovery is 3.34. First for Women is 1.86. So it's a big difference when you see a 5%, a 6%. Then you have a company like Old Mutual sitting at 8.47%. All right. Santam is at 5.96%. I mean, I'm giving you these percentages, and we also have to look at the amount of businesses these companies carry. And obviously, if you're doing a higher business, the higher number of complaints. But if you look at a company like Santam, 383,000 some change complaints went to the Umbud. That represented almost 6% of the Umbud's work for 2019, as compared to a company like Old Mutual that had 244,000, which accounted for almost 8.47%. All right, so it's important to look at these statistics as well. For me, I find when I see statistics like that, I will look at the number of complaints. I will see the number of resolutions, how many were found for the client, how many were found for the insurer, and then I would take a decision. All right, and if you want my personal opinion, go to our website. It's www.financiallyfabulousfemales.com/car quote, and I'm going to get my personal insurer to give you guys a call, give you a more competitive quote than what you have now, and sometimes even more comprehensive cover as well. All right, so these are my 5 things that you got to be doing to keep your insurance lower every year. And you know what? When it comes to those comparisons, don't just do it with car insurance. All right, do it with every kind of insurance that you have. So if you need help with any of those insurance, reach out. I'm very happy to help you. And all of the links that we've discussed today, it's available in the show notes. So just click away and I'll bring those links to you. All right, so that's it for me on this episode of the Wealth Nation podcast. Join us on Thursday night at 8 p.m. on our YouTube channel, Financially Fabulous Females. We're talking a little bit more about insurance. All right, so that's it for me on this week of the Wealth Nation podcast. I will chat to you soon.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.